Revolutionizing Blockchain Infrastructure, Austin Federa on building 00's high-performance network. In this episode, Dr. Jemma Green is joined by Austin Federa, former head of communications at Solana and co-founder of 00, who's tackling one of blockchain's most fundamental challenges, network infrastructure. Along with Jacob Stamler from Power Ledger, they explore how 00 is building a parallel fibre network to unlock blockchain's true potential, why current internet infrastructure is holding back transaction speeds, and what it takes to scale validator networks globally. From his transition from Solana to founding 00, Austin shares insights on creating the backbone for next-generation blockchain performance. I'm your co-host Anthony Pearl, and whether you're an investor or a startup looking for insights, it's time to get unblocked.
Welcome, Austin. Today's guest, Austin Federa, is someone who's seen the crypto space from the front lines. Austin was the heart of Solana's communications strategy, and now he's building a new enterprise called 00 that's trying to rewire the internet's core infrastructure. Austin, thank you so much for joining us today. And it would be great if you could tell our listeners how it all started, and as a part of that, what you saw as being fundamentally broken in the current setup for using blockchain that most people don't see. And tell us a bit about what did you see, when did you realize it, and what led you to sort of arrive at the conclusion that you want to build 00 to solve that problem?
Yeah, certainly. So I'm one of the three co-founders of 00, and really what we set out to solve was the lowest level problem in blockchain. And it's the problem that most people don't even realize is a problem until they start thinking about it kind of at a lower level. And one of the big things that we focus on in 00 is how do you accelerate the speed of validation and the speed of consensus for large validator set systems. And so there's applications too, even in centralized sequencers, which we'll get into a bit later. But at its core, this work comes out of the last 4 years I've spent at the Solana Foundation. And one of the things I got to do during that period of time was work on the FireDancer project, which is a net new validator client for the Solana blockchain. And one of the things that was sort of aimed at that was building a validator client that can do multiple millions of transactions per second. And the team there did an incredible job of actually building that thing. And the Agave client, which is the other main client for Solana, can also push close to similar numbers at this point. Mm-hmm. But you run these things on mainnet and you see nowhere near that level of performance. And this is kind of like a tale as old as time in blockchain is, wow, there's a new network coming out. Look at the blog post of their testnet numbers. Oh, 700,000 transactions. And then you see the thing launch and it does 12 transactions per second. And the question is like, why? What's going on here, right? And we've gotten to a place where the limiting factor is no longer software. It's not how good of software someone has built. Like back in the day, back in like 2020, if you ran Geth locally on a testnet, you really couldn't get it over 350 transactions per second, 400 transactions per second. Like the software literally maxed out at a number far below what your computer could theoretically handle. But because of a whole bunch of unoptimized software systems, you couldn't run them that quickly without a ton of additional work. What we have now are systems where the validator clients across multiple networks are actually quite good. They can do much higher transaction per second amounts than we currently see. The problem is bandwidth and connectivity. That when you're trying to reach consensus at a global scale, you need to do a whole bunch of things that like sound very basic, but actually are quite difficult. So for starters, you have a block built in one location. Well, that block has to get to every single other validator, or at least a significant quorum of every other validator out there. They need to receive that block, then they need to vote on it and send those votes back out to the network. That entire system is very gossip heavy. It requires a lot of bandwidth and a lot of communications. And the internet was never built for this type of use case. The internet is incredible at being able to reach almost any point on the globe from any other point on the globe. It's an incredible mechanism for reach. What it is not designed to do is broadcast. It is not designed for high performance, right? This is the classic question of why did it take us 15 years to figure out how to stream the Super Bowl? Well, it's actually a pretty hard problem. And even when you have, billions of dollars of economic incentive, it's pretty hard to make sure that 10 million people, let alone 100 million people, can stream a major sporting event at the same time in the United States. And so it's these sort of things where we set out at 00 to say, This is like one of those problems no one's looking at, but it is the fundamental limiting factor today on blockchain networks accelerating and getting faster. And we've seen this kind of unfortunate characteristic where as new networks launch, they have significantly smaller validator sets. I mean, Ethereum people get mad at Solana sometimes for only having 2,000 nodes. Most new networks have less than 200. I can't think of a single new fast blockchain that has more than 200 validators in its set. And so this is a trend. If we take it to its extreme, you end up with Hyperledger or you end up with centralized sequencers. And I don't think that's a future that is doing this technology and this sort of the philosophy and the mission of the space justice.
Aye. And so what you're saying is that the internet was built for a particular use case and it's not that fit for purpose for blockchain. And so you're looking to create a new telecommunications cable infrastructure. And I also understand leverage other people's spare capacity as well. So it's kind of a combination of using unlatent capacity and building dedicated capacity as well to actually realize the software's potential by providing the underpinning hardware that can support that.
Yeah, it is a parallel fiber network to the existing public internet. And this sounds crazy and like we're not buying cable ships, at least not yet, and laying new cable. But this actually exists, right? Google runs their own private network. Amazon runs their own private network. Apple runs their own private network. Facebook is one of the largest investors in undersea cable infrastructure at the moment. And it's not out of the goodness of their heart and they want to make the internet better. It's that they want to sell ads. And like the internet infrastructure was too bad in the Philippines for them to be able to sell ads. And so like at some point, almost every significantly successful enough software company pivots to hardware. Facebook first pivoted to building its own data centers and stopped using other people's data centers. And now they've pivoted to, or I'd say expanded, maybe not pivoted, but expanded to building undersea fiber capacity because using other people's pipes, they didn't have enough of them and it wasn't economically efficient enough to do that. At the same time, all of traditional finance runs on dedicated infrastructure.
Yeah.
That's the other component here, is that the minute you need high performance systems or you need systems that have a known amount of time that it takes to do something, which blockchain is as well, you run into situations where the public internet just has too much variance to be suitable for these types of applications.
Yeah. And are you building the infrastructure all over the world or are you doing it where there's stock exchanges, so there's already good telco infrastructure in place and building around those places? What's the kind of geographical strategy?
Yeah, so we have contributed network connections from 6 different entities at this point. And so 2 of those are trading firms. And so theirs tends to be very located around stock exchanges, which is awesome because stock exchanges also tend to be centers of economic activity, right? There's a ton of economic activity in New York, and that's not coincidental. It is because the largest exchanges are located here. Same thing with London, same thing with Tokyo. But we also then have 2 different bare metal service providers joining the network, which are folks who run validators and other types of servers as a business. And so they have a different connectivity graph. And then we have 2 VCs that are joining and running a totally different type of network graph as well, just based on what their interest is and portfolio companies they want to support in that process. And so we have a pretty good mix at this point. But for example, we currently have no connectivity into Africa, just none. And there's a reason for that. There's no major financial markets in Africa, and there's no major data centers run in Africa really at this point. And so one of the limiting factors that we have until we get to a certain size is we are going where the existing pipes are. Now, it just so happens that where the existing pipes are also is where most of the economy is. And so there is a very good overlap from that perspective. But one of the things people have to remember, you see a lot of times people talk about like, oh, validator distribution is not perfectly global. And it's like, well, yeah, 70% of the world's population is in the Northern Hemisphere, right? And even more of its economy is in the Northern Hemisphere. And so when you look at sort of perfect distribution, you've got to remember 1/2 of the entire globe is the Pacific Ocean. And so there's a lot of these things where it's like, it's going to be pretty hard to get connectivity down to Australia, for example, because it's very far and there's not a ton of people. But getting connectivity into places like Southeast Asia, which you might think are like, oh, Vietnam, Cambodia, Thailand, those are fairly poor areas. So why would there be all this fiber connectivity? Well, because the economies are so digitized at this point that there actually is a lot of good connectivity and good data centers in those regions. So I would say that we're being very practical about how the network is built out and expanded. But the goal of 00 over the long term, we'd love to get it into every data center run in the world.
Wow. And so what you're saying, though, is that the places where you're going is where there's already established financial markets and associated infrastructure and a lot of economic activity. And if blockchain is like programmable money, you're really starting to offer alternative infrastructure in Web3 that already exists in Web2, if I understand correctly.
Yeah, I think the way to think about this is sort of the place you need to run validators are places near centers of economic activity because you need this to both state and to transaction processing. And state is the one people forget all the time. Everyone's like, oh, I need a validator so I can process transactions. A validator gives you fresh market data as well. And so if you are trying to run a payment processor, for example, in, let's say, like Kenya or something like that, you do need validators locally because they need to get the state updates. It's not just enough to say, oh, my transaction was processed by a validator here. When do I get the confirmation, the finality back from the network that says, yeah, it was processed and included in the block, and here's the proof that this thing actually occurred?
Yeah, is that related to the topic of network jitter? Jacob and I were talking about that earlier today
Yeah.
in preparation for this conversation.
Yeah, so one of the main reasons that we are using dedicated fiber and not just, there are some folks who've tried to build software overlay networks, which kind of sit on top of the internet and try and make it more intelligent. We're just bypassing the internet entirely. And the reason we're doing that is that's exactly what the high frequency trading firms do. And that's where a bunch of our engineers are from. And so they have experience with that. When you're dealing with the public internet, you have longer latency times when you're talking to a server somewhere in the world. This is known as your ping time. If you grew up playing video games in the 90s, you intricately know what this number means. You're going to have a good experience or you're going to lose. And the same is true in financial markets. If you have high latency, you are going to lose every time. And so jitter is a method of measuring kind of the standard deviation between multiple ping times. And so if you are on a dedicated piece of fiber, right, it's always the same amount of time because it's only your traffic on it. There's no congestion on the network. There's no merging that has to occur. So the jitter is basically zero. You kind of think about like if you're getting onto a highway and you have two highways merging, it's a 2-lane highway and a 2-lane highway merging into a 4-lane highway. Traffic slows down. It shouldn't in theory, right? In theory, you've gone from 2-lane roads to 1 4-lane road. Everything should be perfect and everything should be moving at 70 miles an hour, but it doesn't actually work that way. There's always slowdowns when it comes to merging, and internet routers work exactly the same way. The difference on internet routers is you're usually going from a 16-lane highway to a 4-lane highway, right? Now that 4-lane highway might be running at twice the speed, but there's a whole amount of queuing that has to take effect whenever you have these systems kind of merging with one another. And that is where you get jitter in the system. It's kind of like everyone's got to stop red light, right? And it's like, well, now these guys go, now these guys go. But sometimes you hit all green lights, sometimes you hit all red lights. You can introduce jitter into a system just through the normal process that we use to handle merges. The thing about jitter, though, is it's a real killer for high performance systems because suddenly data is now arriving out of order. And that has to be put somewhere. It's put into a buffer. Well, are we sticking it in the L2 cache? Probably not. Are we sticking it in RAM? Okay, cool, but RAM's actually really slow. People think about like, oh man, like computer memory is so fast. It's extremely slow compared to what a modern CPU can do. And so every time you have to introduce systems where someone is waiting for data, you're introducing a lot of latency into the actual validator client. One of the craziest things from Firedancer is we were digging into like, what really are the performance optimizations doable for Solana? And so for a while, there was a focus on let's reduce the amount of RAM that we need in these machines and put more of it in NVMe, which is basically a flash storage. And it is significantly cheaper than RAM, and it's still quite fast. Turns out 80% or more of a Solana transaction is just waiting for data to get into the CPU, right? It's like, oh, I want to do this swap, and here's all the accounts I need to talk to. The scheduler has said, this transaction is going to go. 80% of that time is the process just going, okay, where's my data? And that data has to go get fetched from the NVMe. And so one of the things that was sort of a discovery in this process was we should be maximizing RAM. If we want the network to move as quickly as possible, yes, RAM's a bit more expensive, but validator operators are actually going to make a lot more money if they're able to process more transactions. And so it's cheaper to tell them, go spend an extra $750 or an extra $2,000 on more RAM up front. You're going to get the payback for that in like a month because the network's able to move faster because we're not waiting on data. And the same principle applies on the network side. Solana and other blockchains are going to be able to move more quickly. They're going to be able to process more transactions per second. Validators will therefore make more money, all because we're going to speed up the connectivity getting into and out of the actual physical machine.
Great. I really like how you explain things analogously. And I know you've got a background in communication. So I think that, you're explaining very technical things here in a way that everyday people can understand them. And I think that is why, even though this is a very ambitious idea, it's already got a lot of traction. You worked in Solana, which is an established organization and ecosystem that's growing fast. How have you had to change in terms of how you operate, Austin, in terms of now being an entrepreneur in a startup?
Yeah, I mean, I would say we had the least realistic fundraising experience anyone has ever had. And so there's a few of these things where they're real champagne problems. We had massively 150 mil of demand for a $28 million round. So there are some of these things where people are like, how has the entrepreneur transition been? I'm like, don't ask me. I don't think it's representative of most people's experience, because something about the project really caught people's mind, and which is a little bit surprising to me and to my co-founders. This is the least sexy project in crypto, but people seem to be very excited about it, which is awesome to hear. I will say some of the biggest changes are when I joined Solana, it was not known, but it was live. Right? Mainnet was live already. I joined in December of 2020. So then I worked in live for 9 months at that point. Bootstrapping and launching a thing is very different. I think we're going through the period now where we're when I joined Solana, there's a lot of stuff wrong with it, but the fundamental system had been designed and been deployed. And we're still in a place where we're designing some stuff live on the fly. And it's just a very different type of experience to say oh yeah, we actually got this feedback on this thing, and we may need to rethink how all of these other systems work because of that. And part of this is because we launched the project publicly in December, but we really only incorporated the project in October. And so we're still very I wouldn't say we're early on in the process, because we have a bunch of engineers who've actually been moving very quickly, but we haven't had this years of writing a white paper and spending 6 months trying to get funded and all these other things that you go through that really crystallize architecture in your head. And so we have a lot of far vision stuff about we need to switch over routing from IP addresses to pub key based routing. And that'll allow us to do things like fully autonomous SSL certificates effectively. Wouldn't it be cool if all connections were not secured by the goodwill of some centralized signing authority, but was just public private key cryptography, and I connect to your validator and we just handshake using cryptography. And that is 100% proof that you are who you say you are. There's a lot of cool things we're able to do on a network like this that are not going to be possible on the public internet. But it also means that we have a whole 6 years of engineering work to do to get this thing to the place we really want it to get to. And there's a lot more staging to be done in that process. So I would say that those are kind of some of the biggest changes. The other thing just too in a mindset change is there's a really big difference between being an executive somewhere and being a founder somewhere. And one of the biggest things is the timelines on everything just extend. That in some ways, when you are working at a place like Solana or whatever, a lot of it is quarter to quarter or at most year to year in terms of the planning and these types of things. And that's what you're evaluated and graded on. And one of the differences is in any organization, it doesn't matter if you are executive vice president who's been there for 10 years or whatever, you are fighting to earn your spot every day. Right? Especially in an organization like Solana, where it kind of prides itself on I wouldn't call it high turnover, but a lot of people leave to start new things. And that's considered something to be really good and something to be celebrated. But it also means that the folks that are there, there's always this thing in the back of their head about, is this the most important thing I could be doing? Right? Could I go start my own project? Could I make more of an impact somewhere else? You saw Maddie leave to do Coliseum. You saw Cash leave to go join Jupiter. There's a lot of it's a good cultural thing. But one of that things is there's this real sense of what have I gotten done lately at Solana Foundation, which is awesome. But your timescales and your whole perspective changes when you're thinking about, okay, I need to think about how do I orchestrate 5 years of success of this protocol, not what am I doing to advance us in the next 3 to 6 months. And that's just a big, I would say, conceptual change in how you think about these types of problems and things.
Definitely. Yeah. It's like being a parent, your time horizon changes.
Totally. Yeah, I mean, that is a good analogy, right? It's like you can have all this energy you put into a pet, right? Which is obviously not the same thing as a kid, but like pets have a much shorter life that they operate on, right? And when you're dealing with a child, it's like a totally different relationship around like, okay, it's not even 18 years. It's like the rest of my life, this child will be a part of it, which is just very similar, I think, to being a founder, especially in a very public space where like, unless the project fails, even founders who leave projects and are not kind of active in them anymore, it is their identity in a lot of ways, their public identity for the rest of their lives. Like if Tim Cook retires, he's still the Apple guy.
Totally.
I've had the chance to see you speak live at Solana Crossroads, which I enjoyed a lot. And I think one of the sentences that really stood out to me was kind of, you can't fix physics with software. I think crypto Twitter also loved that one. I think for me, the question is really in kind of the context of designing these blockchains of the future, right? We have new blockchains coming up all the time. How do you underline the importance of kind of custom infrastructure, maybe even beyond 00? 00 being one part of that, but others that kind of help build this infrastructure layer that is required to really scale to that 1 million TPS everyone is always talking about.
Yeah, I mean, my whole view on this is that specialization is a result of economic success. And the problem I see with a lot of blockchain projects that start trying to touch hardware is they try and touch hardware before they have any product market fit or any type of success attached to them. And what that means is they're always in an uphill battle. I mean, Helium, like love Helium as a project, they had a huge issue because they started trying to deploy this DPIN network that wasn't cellular back in the day. It was for like IoT connectivity. And then they ran into a supply chain shortage caused by COVID. And suddenly like no one could physically deploy the infrastructure they needed. And the project wasn't economically successful enough that people were willing to pay $1,000 for a miner, so they just couldn't get production slots, right? And so this is kind of, I think, one of the pieces with specialization is it needs to be tailored to economic opportunity. So if you run to specialization too quickly, how many years was AI run on x86 chips for, right? Huge amounts of time. And then it was run on consumer grade, or like, you got to remember, most of the money NVIDIA used to make was from Pixar rendering farms, right? And gamers and like people using SolidWorks. It was not these like research level infrastructure projects that you see nowadays where the majority of a fab producing NVIDIA stuff nowadays in the high end, it's all going to OpenAI style companies or bioinformatics systems or something along those lines. But that level of specialization where even a company like NVIDIA felt they could spend hundreds of millions of dollars to build a GPU that sells for $100,000, like you need customers for that 100,000. And like, it sounds so obvious, right? But like the minute you get into specialization, you crash your customer base. There's not a lot of people in the world that are going to buy H100s or H200s. They happen to have a lot of money, so it's a worthy market to serve, right? But this is kind of like in crypto, you get into this a lot. And so one of the things about 00 is it's not just a network for crypto, right? This is like really core to our mission, our expansion ability is I think the ambition in the blockchain space is still far too small. People are really excited about 5,000 TPS or 10,000 TPS. We need multiple chains doing millions of transactions per second. And I don't always see the ambition to get there outside of Solana. Maybe the mojo's back in Ethereum. We'll see. It's definitely back on Twitter, but yeah, Twitter doesn't always translate into reality, as we all know. So we'll see how that goes. But I'm actually really excited for Mega ETH and Monad and like these networks that are trying to do different things. But 00's appeal is for all high performance distributed systems. And so that means if someone wants to build a centralized exchange that operates in a way where there's multiple geographic ingest points for their order book, they can do that using precision timing on the 00 network. There are these like little creator platforms out there, like Curiosity and Nebula are kind of two examples. There's nothing crypto at all related about them, but they're trying to compete with Netflix. And they're kind of trying to be like, what if Patreon had like a streaming service, right? Or Mubi is another one of these examples. It's like a documentary streaming network, right? And all of these, their profitability kind of hinges on what they get billed by the traditional players. And the traditional players like own YouTube, right? Like if you're using GCP, at the end of the day, Google's going to have a better rate than you are on this stuff because they own the infrastructure. And even if we have laws in place about equal billing, they're buying at such high quantities, they're going to get insane volume discounts on this stuff. And so one of the purposes of 00 is to say, what if we can make bandwidth much cheaper and much more available and much higher quality to folks around the world? Now, we're not doing last mile delivery. You're never going to have a 00 internet connection at your house. But most of the difficulty is getting into a metro area. It's not actually getting to people's homes, at least in the developed world. And so I think that's kind of one of the big secret, not like secret parts, but parts people don't talk about as much about 00 is like, we're never going to compete with HFT firms for speed on like professional trading from that perspective. But there's a whole market here for alternative systems that maybe even are crypto related, but are sort of, I would say, spiritually related to this vertical integration, that mindset that's been taking place in a lot of the tech industry at the moment.
Yeah, that makes a lot of sense. I wanted to use kind of the profitability aspect as a quick segue also to talk a bit more about the business model that you have at 00. Obviously, kind of validators and RPC providers are going to be tasked with financing some of that as well, right? And I remember, I think it was you or it was Mert having a poll on Twitter regarding, would you be willing to kind of pay more for a premium service?
Yes.
And it was kind of like a shared, half of the people were saying yes, half of the people were saying no. And so getting kind of to this revenue stream for you as well, do you see this kind of premium infrastructure tier being something that will be established?
Yeah. So there's a real, I would say, like bifurcation in the validator operator space between people who believe the future is better and people who believe the future is worse. Validator operators are a strange group, right? We owe them a huge amount of thanks for running all this infrastructure, but there's like a mix of them that are like long-term believers in crypto and those who are like ROI, bottom line, I am running a newspaper business and like eventually I'm going to get killed, but for now I want to extract as much money as possible from it. And so for those people, I think they just don't believe that we're going to be able to make Solana or any network 2 to 3 times faster than it is today. Look, if we go to anyone out there and say, hi, I'm going to double your yearly income, but you're going to have to give me a 5% commission. There's no one on the planet that would say no to that, right? Unless someone else has already agreed to double your income, right? But it's these sorts of things where as long as we can deliver on the performance that we say we can, no one will have a problem paying for that. We just have to have the counterfactual examples of what the profitability difference is in operating on 00 versus operating on some other type of system.
Is that maybe also the reason why you start with Solana? I mean, you've mentioned several times that you're not a Solana project, right? And there's no funding from the Solana Foundation for 00.
Yeah.
Is that just because this is the easy entryway for you to actually prove that 00 in essence works? And there's a lot of interest from Jump and from like from Cheeto, for example, of helping you build this. And then you can expand from there to other networks.
So Solana, like as much as people on Twitter might be upset about Rev as a metric, it means that there's economic competition. And so anywhere there's economic competition, speed matters. And anywhere speed matters, 00 has product market fit, right? And so there's probably 3 characteristics of Solana that make it such a great place to start. The first one are the 0-1. It's the hardest network to support by far. So like just from a simplicity standpoint, if you nail the hardest one, the rest of them are just downhill from there. So like, why not start with the hardest one? That's just like core DNA of the project. And that was really something that like I got from Anatoly, because he's always like, start with the hardest thing first, because otherwise you're never going to get to the hardest thing. So Solana has economic competition, right? Which means there's a lot of economic activity moving across the network. It's also a network where the software client can support much higher throughput than you currently see operating on mainnet. And it has a lot of validators. And it's those 3 things that come together. There's networks that have a lot of validators, but they have no economic activity. There's networks that have economic activity, but they only have, like Hyperliquid's a great example. There's 11 validators at this point, and they're all run in Japan, I think. And like, we have a lot we can bring to that network. But if that network never aspires to be global or never aspires to leave Japan, then there's just not as much product market fit necessarily there for someone like us to work with them. So on Solana, we kind of have this like magic trifecta. There's many other networks we've been talking to as well, in large part because they have problems that maybe are different and the TAM isn't quite as big as it is on Solana, but they're still worth serving. So, a great example of this is DA layers. DA layers have a ton of trouble moving data around. They're not competitive systems at all, though. No one tries to DDoS Celestia, right? Or EigenDA or something like that, because it's not what the product is, right? No one tries to DDoS Arweave or Filecoin again. There's no economic opportunity benefit to boxing other people out from being able to write to the DA layer. And so there's a bunch of these types of systems where we can bring technologies to them that will support them. But right now, the biggest market opportunity by far is in the crypto space is Solana. And so what we're trying to do is basically start off with Solana, nail Solana, and then expand out from there. It also is a good proof point of like, if we can do this on Solana, we can definitely do this on another chain too.
Well, that about wraps up the first part of the conversation, exploring how 00 is building a parallel fiber network to revolutionize blockchain infrastructure. Part 2 of the conversation with Austin delves deeper into the transformative potential of his technology. Join us as we discuss how increasing network capacity by orders of magnitude could unlock entirely new categories of innovation. Austin's perspective also on sustainability in energy markets and the role of government regulation in technological advancement. We'll also explore his journey from sustainability advocate to blockchain infrastructure pioneer and his vision for creating a more efficient, connected future. Don't miss this thought-provoking continuation of our discussion on the future of global connectivity. That's all for this episode of UnBlock'd. Please check out the show notes for information on Power Ledger and other contact information. We welcome your comments and feedback, and please hit subscribe wherever you are listening. This podcast was produced by Podcasts Done For You. We look forward to your company next time on UnBlock'd.